Welcome back to the channel, friends. Huge news in the past week that properties are going to be forced onto the market by Congress. Congress is talking about two bills. Bills in both houses of Congress have come forward forcing hedge funds, Wall Street to sell homes. But folks, this is a trap. I don't care how many videos you've seen in the past week on this topic. I'm going to take you into the law and show you specific wording that is very troubling. And I do not think it's going to be the order of 400,000 or 500,000 homes simply from Wall Street that will be forced in the market. I believe this is actually a trap that will actually come down to the mom and pop investor based on the language that exists in the same bill. Further, I'm going to show you some crazy back end stories that tie this all together. Some symptoms that I saw coming through the news a month ago that blew my mind when I finally saw what was coming down the pike with what Congress introduced. And everybody loves the narrative. There's been a lot of drum beating about the idea that Wall Street's buying up too many homes. But let's look exactly what's going on and you make the decision for yourself. The top story is that Democrats want to kick big investors out of the housing market and improve affordability. So it goes on to talk about two specific laws. So starting at the top, it says in the Senate, the End Hedge Fund Control of American Homes Act of 2023 would force big investors to sell off single family homes they own over a 10-year period. So this particular bill is going to be $50,000 per house over 50 homes. So anybody that is a hedge fund, it says a hedge fund, this is the leading topic, is to basically sell this bill that it's really just hedge funds. But wait till we read the bill. Because when you think of 50 homes, a lot of people think 50 homes is a big number for investors own. I know many common investors, you hear many stories about even immigrants or people that were teachers their whole lives that bootstrapped and bought one house after another. And before long, they own a lot of real estate. But let's take a look at this further. This particular law from the Senate side is proposing that anybody that owns property more than 50 in a corporation, hedge fund, would have to basically start selling off 10% of the housing stock every year up to 10 years. So for instance, if you own 2,000 houses and you're BlackRock, whatever, they would actually have 200 homes approximately on the first year would not just hit the market, you'd have to get them sold. They have to be done. Otherwise, they would face a $50,000 per house penalty. Now let's look at the second bill. Second bill seems to me a little more innocuous, but it says at the other end of Capitol Hill, Democrats in the House proposed a Senate bill. This is the top paragraph that would discourage Wall Street's involvement in housing markets by charging investors who own more than 75 houses an annual fee of $10,000 per house. And I've heard many mainstreamers on YouTube that are missing this. So if you've already seen some of the folks that I highly respect, like John Williams, Nick over Venture Consulting, Nick said, hey, this won't affect mom and pops. Let's look at the law. John Williams said he thinks everybody's going to, the investors are going to dump 500,000 houses in the market in order to blow it up, in order to come back in and buy homes at pennies on the dollar and then pay the $10,000 per house, which I can't even pencil that in my head how an investor, even BlackRock, would even try that. But let's look at the law, okay? So check this out. Let's read it, okay? I'm not an attorney. You're not attorneys, probably 90% of this audience. But look at the top, okay? So this is the Senate version, which is essentially a bill that creates a tax from the IRS. So it creates a change to the tax code to enforce by the aiming the gun at the investor of taxation, okay? So forcing them, getting them to move based on tax consequence. So here it is, $50,000. You see it in line 24 at the top of the screen. And that's for in excess of, look at the top, okay? This law has what's called the maximum permissible units. I feel great renewed confidence as an American when I see bills coming from Congress telling Americans how much property they're permitted to buy, okay? But folks, listen, look at the bill. There's two paths. You can see this path right here where the cursor is moving. You see the second path right here. Both of them say similarly that you got to dump 90%, then 80%, 70%, all the way down, okay? This is, by the way, the minimum permissible, again, on this bill is 50. But let's look at what's defined. Now, by the way, read the headings. It says the maximum permissible units for a hedge fund taxpayer. Yay! That's everybody's leading with that example that this is for the hedge fund taxpayer. But next to that, what does it say? The maximum permissible unit for any other applicable taxpayer. Well, being a good student, let's go down and actually read the definition of an applicable taxpayer. Okay, what does it say right here? Number 2, applicable taxpayer described. An applicable taxpayer is described in this clause with respect to any taxable year if, number 1, if what are the 2 things here? The such taxpayer was not a hedge fund taxpayer for the preceding taxable year, and such taxpayer is a hedge fund taxpayer for such taxable year. It's the example, and again, go in the comments. If you're an attorney, like, well, this is how this can actually play out. It says if you were a taxpayer before the law starts, that was a hedge fund, you are, over 50 houses, you've got to deal with it. Or if you are a taxpayer, there's obviously a hedge fund. It gives you an example of what a hedge fund is. Then 50 homes or more, you got to deal with it. You got to solve the problem or be taxed. Now let's go further into understanding why the narrative has come about. So here is a story that says no, Wall Street investors haven't bought 44% of the properties. Now you can't see the entire title on screen, but I'm going to scroll down so you actually have a good view. Now, Logan Matashami wrote this, which I give this guy a hard time. He's on CNBC. He's actually a lead analyst for a company called Housing Wire, which does a lot of news for real estate. And he goes in by saying, look, this is a big nonsense narrative. Look at this, okay, folks? This is a 20-year graph of how much percentage of purchases come from institutional investors and from iBuyers. Now, iBuyers, if you all are aware, iBuyers are the OfferPad, the Open Doors. Those are the people that just basically say, we'll buy your home. If you want to sell it, we'll buy it. And then they go and they return that home to the market. Now, I believe some of the iBuyers rent their houses and keep them, but you got to understand, most iBuyers aren't keeping their houses. So it's not like they're holding on to the housing stock. They're just buying it temporarily in order to flip it back to the market. So the iBuyer isn't really a person locking up housing units away from the public. But if you look at the institutional investor side, look at the 2 biggest years. Most years they're at 1%. So you see the line here across 1%. There was a spike, and it looks like it was around 2015, where the line went all the way up to 2%. And then obviously when there was tons of funny money and PPP and all kinds of other money in the marketplace, there was a lot more capital pushed out that was from our central bank. And you got to understand, folks, everybody's making the boogeyman out of BlackRock and Vanguard and these guys that are buying all this real estate. But these are not phantom organizations. Everybody's like, where's all the money coming from? It's your money. BlackRock and Vanguard. If you work for UPS or See's Candy or Bank of America, wherever you work, you probably have a 401k, and that 401k probably includes Vanguard in its holdings. So, these are just money from the public for the majority of this. So this is just part of, part of their general holdings, but is the actual Wall Street marketplace controlling an extraordinary amount of housing? Okay. Before we answer that question, look at this. How much is the overall share of housing stock actually owned by investors? Okay. So how much real estate is non-owner occupied in the public marketplace? So you can see around the year 2000, left side of the chart, it was around 20%. You can see through the last boom, it went up to about 30%. And then there was probably a bunch of properties lost to foreclosure. And going into 2012, it dropped, but it peaked again around 2010, 11. It went up to over 30%. And I actually think it's still lower than right now. You can see it's pushing 30% again. But is all of this ownership from Wall Street? And the answer is no, not even close. And folks, listen, your government knows this chart that I'm about to show you. You've got to understand, if your government is working as good actors, you got to understand they know who owns what. And so when you see bills that are trying to put moratoriums on how wealthy you can get, okay, this is something you need to be concerned about. So let's take a look at what we're looking at. You can see that the graphs here are composed of large gray lines that have a shading of a darker gray, and then they go all the way to blue. Now, the legend is over here on the right. And the top legend is basically these numbers you see are basically the dark blue is the iBuyers, which again, don't worry about iBuyers because they buy and sell. They don't hold and control most of their housing stock. It's, the goal of this is to free up housing stock held by Wall Street. But look at this. What they have here is what's called a tier 4 investor, a tier 3 investor, tier 2, and then tier 1. Tier 1, you want to think of them in mom and pops. Tier 4 are the big ones. Tier 4 are the largest entities that buy real estate, okay? So if you look at this blue shading right here, these are the Wall Street owned properties that were purchased by given year, okay? Going back to when they really started to get active back here on this side of the graph in 2012. So you can see, well, if all this is the investor purchase, what's all this big gray line underneath? Like, how come the blue is just the tippy top of each year? Well, that's because all of it's being bought by mom and pops. So look at this. This, by the way, has the total of purchase. You can see right here that tier 4 is people that, or entities rather, I should say, hedge funds that own 1,000 plus properties or more. They account for less than 1/3 of 1% of the purchases. And this is the first half of the year we're in right now. First half of the year we're in, hedge funds bought less than 0.3, 1/3 of 1% of all real estate went to a hedge fund. Now tier 3, which is people or investment companies, LLCs. I know individuals. I had individual friends that started with me in real estate that we bought our first house together, bought 2, bought 10. They have 200 to 300 units. I could cite multiple. I'll tell you right now, look up Troy Kearns and look up Thatch Nguyen. Both of them, regular real estate Joes who coddled their money together, worked hard, and built up beautiful investments. You can actually go and train from both of them. Not a sponsored push here, but my point is the tier 3 guys are the regular get together and make it happen kind of guys. They're people that you could rub elbows with in the marketplace. Tier 3, it comprises of 100 to up to 1,000 homes in ownership, okay? That group of people bought less than 1% of all homes. Now, people who owned 10 to 100, okay, so tier 2 is I have 10 pieces of real estate up to as many as 99. Those bought nearly 3% of the assets, but people buying their first rental property up to 9 comprised of 19, almost 20% of all the real estate, folks. Now listen, here's my concern, okay? Because I can see what's going on. You have Congress that are making a play to say, hey, look, this is how much private property you can own, okay? Where is the agenda come from that regulates how much a person can own to private property, okay? So you have to understand, if you're talking about, you're running a bill up the flagpole to get, rally everyone behind it. This is how this works. Your government is, whether or not I would say most people fall under 2 prisms. They either think that corporations are all bad, they're all evil, but my government is good. Or some people think the government is all good and, or vice versa. They think the government's all bad and the corporations are good and vice versa. So depending on which prism you fall under is, you may or may not have the faculty to come around and say, hey, maybe there's something sinister here. Maybe there's a reason that they want to put a moratorium on how much personal or private property that a person could buy. Because why would you run a narrative to push a bill through to limit people owning more than 50 pieces of real estate based on this tiny sliver at the very top? And more or less, when I look at this graph, I think, nah, it's not really a play for just this blue part. It's a play for this whole upper section. And honestly, folks, if that amount of real estate gets pushed in the market, you're talking millions of real estate homes hitting the market. That is enough to completely shift everything in terms of pricing and price drops. But let's bring this back full circle. I was fascinated a month ago when I ran into a video that Graham Stephan put out. Now, probably 90% of you know who Graham Stephan is because he gets 700,000 to 1 million views per video. He's got a huge following on YouTube. But he put a video, you can see up here on the right, that says Fox News canceled me. And it got over 700,000 views in a 1 month period of time. I was like, this is fascinating. Let me check it out. And it comes to talk about the fact that Graham Stephan was invited by Jesse Waters on Fox News to come on and actually talk about what it means for all these millennials to be pushed out of the market by Wall Street. Now, you got to understand, a guy like Graham Stephan has, he has a massive following. A lot of his wealth was gained on getting and being seen, being noticed. So for him to get invited on Fox News, any of us would, hey, we want to jump at that. We want to have the opportunity to have positioning and be noticed and seen by others. But when he was asked, his producer said, look, we want you to help us build this story on Wall Street really taking advantage and stifling all this opportunity for the millennials. And now they're just living on their parents' couch forever. And he responded, because he knows the numbers. He said, look, I appreciate the fact that you're trying to have me on. I've always wanted to be there. But the reality is, I'm going to tell you the truth, and it's not going to build up your story. So he goes on he talks about how he was met with the response and what happened. Here's the interesting thing, folks. Jesse Waters, Fox News, was pushing this narrative just 1 to 2 weeks before the Democrats roll out this Marxist piece of agenda, okay? So it is what it is. Listen, we can all get excited about our government taking a position saying, I'm going to force the hedge funds to sell a teeny tiny sliver. You know why they're doing that? It's not the teeny tiny sliver. It's everything beneath. It's a stifling of general wealth, ability to gain wealth. So if you're sitting there and you've ever had a vision or a goal for yourself to buy a bunch of real estate and become wealthy that way, I mean, it's happened tons of times over, but that becomes the law that gets written. And once you have a law written, it's like the camel sticks its nose in the tent. This is how our government works. It's like, well, we've held these people back and they can't buy. Why don't we do it to these? Look at the rest. Well, look at all this gray section. Why don't we force them all to sell? So where does it stop, right? Because that is what's going on here. But take a look. It is fascinating to me that Fox was rolling out and doing legwork on this topic just before that came out. Take a look. This is what he said in response.
Get to the bottom of what's actually going on and clear up a lot of the misconceptions. So in response to that email, I clarified my position ahead of time, very clearly, so that way they'd know where I'd be going with the entire story. The response I got back from them was no problem. We don't have to.
So he goes on, he sets up the interview, and then they come to his house and the interview kicks off. Let's take a listen to what he actually says to them about really, because he told them, he's like, look, I'm not going to be bending to your hedge fund narrative. I'm going to tell you the facts. The reason why millennials are screwed, here's why. And this is what he goes into.
They're still living with their parents, and how unfair it is that Wall Street is allowed to buy these homes and drive up the price. About a minute later, Jesse Waters began talking into my earpiece, and his first question was along the lines of, shouldn't it be illegal for Wall Street to buy homes and drive up the price? What's going on? Thankfully, I have my entire portion of the call completely recorded from beginning to end, and my response was to simply reiterate the facts. Mortgage rates are the highest they've been since 2000, housing inventory is at the lowest level since 1999, 60% of homeowners have a rate locked in below 4%, home prices have risen 250% in the last 20 years, whereas average incomes have only risen by 80% at best. So the fact is, unless someone is planning to live in their home for the next 7 to 10 years, buying right now tends to be a losing proposition when you account for closing costs, maintenance, property taxes, insurance, and everything else that goes along with homeownership. If anything, this is one of the few times out there where it's a lot better short-term to be a renter than a buyer. So I was fully prepared.
So he's spitting facts. He's saying, listen, right now it's a terrible time to buy. You're going to need a place to rent. And ultimately, he's not cheering for Wall Street. He basically brought it up to them. Hey, look, Wall Street only owns less than half of 1% of all housing stock. There's 144 million homes in America. If Wall Street sells everything, that's only 500,000 homes. That is a drop in the bucket. So ultimately, he's saying, look, your real problem is housing has gone almost triple. In 20 years' time, the price of a home has gone up 250%. People's salaries have gone up 70, 80%. That's the problem. And here we go.